let's proceed with Insurtech. Insurtech is quite new vertical in fintech. Started only 2 years ago, but growing. If fintech became 2 times bigger each year, Insurtech became 4 times bigger each year, growing 2 times faster than fintech total. If fintech attracted 21 billions of investments, new investments for the last year, between these 21 billion, 3 billion belongs to Insurtech. Already for first half of this year, Insurtech attracted 2 billion. But maybe 3 billion sounds huge, but only in US, only car insurance companies spend 6 billion only for advertising. It means that they spent 2 times more to position themselves as innovative, customer-oriented players than real innovative companies spending to create products, to attract customers, and to provide real value. It's a great example. When we sold one of our company for one of big traditional banks, we had very hard negotiations with them. They told, oh, we think that this company is a little bit overvaluated, but finally we found that they spent about 40% more for advertising them as innovative bank, but they are not innovative bank. And finally we told, come on, you can buy innovative bank cheaper rather than to advertise yourself in the future as innovative bank. And they, oh, really? You spend so much for this bullshit? Yeah, it's cheaper for us to buy this company. And finally they decided, oh, okay, let's sign this papers. Insurance industry, for sure one of the biggest industries like banking industry, is high margin. But it is one of the most old-fashioned industries. Most of insurance agents, average age of them 58, 59 years old. Sometimes they can ask you to send them fax. It happened. Insurtech, it's not about how to help these guys to accept applications online or organize customer support online or attract customers via price comparison platforms. It's about how to serve them online, it is very big difference to be digital company and to be traditional offline company which are trying to be in digital channels. Really, you have to think digitally, not trying to go to digital world. And one great example regarding this differentiation. When Steve Jobs came back to Apple second time, he understood that future of Apple belongs not to current business, but still current business providing some profit today. And he decided not trying to change mindset of current employees, not trying to change their product line, because when you are trying to change something which already exists, you can kill these processes, you can demotivate your employees. He established second Apple, which started to be run by Johnny Ive, still he's CPO of Apple. And he had and still has the same title like the same guy in old version of Apple, but he had other building, other stuff. The KPIs didn't integrate it with KPIs of business of Apple, and it is the great way how to set up new business, how to be innovative, not trying to disrupt your own current business, but to set up new business in parallel, not trying to involve, to engage whole new talents inside all teams. All team can kill these new players, because these new players, they trying to think not about politician games inside each company, they're trying to think only about their products. And if you will read such books like Innovator's Dilemma by Clayton Christensen, he analyzed 20 industries for last 10 years, and how, even if you are a big successful company, how to survive further. And he also advised, if you want to be innovative, do not try to change mindset and processes of current business. Split your business for two parts. Do not mix them. Give 100% of freedom for new team. Do not try to talk with them about old KPIs. Give them opportunity to even to fail, because we just talked downstairs with some guy that even if you are a great company and you will give some chance to your current employees to set up something new, they will afraid to be failed. Because in whole big corporates, everybody afraid to be fired after some fails, but for entrepreneurs, it is a normal situation. It's okay to be failed, because as you know from statistics, from analysis, you have to be failed 13 times, and only after that you became successful. But profit from your success will cover all losses after your fails before. And this is the way insurance companies, they are more active than traditional banks in Fintech. I mean, insurance companies in Insurtech, they are more active than traditional banks in Fintech. And I hope that they will support these new players better than banks supporting Fintech players. I think it is a great way for them to survive, to originate new businesses. Even maybe their future belongs not for current business models. Right now, we can count about 550 Insurtechs across the world. As I mentioned, totally about 5,000 fintechs across the world. Between these 535, we are highlighting as a fund 33 to know about their business models, about their new features, new steps. We can split these two players for two streams as the same situation like with online lending. Several players, they prefer to own the risk by themselves based on their balance sheet, and others just tech providers how to be integrated better to originate conversations, how to analyze data from your customers better than all players are doing. Between these 33 companies, I will talk a little bit about several of them. Lemonade, and they're the same company, Insurance from Germany. Lemonade originally from Israel. Right now it is a US-based company. Both companies, Lemonade and Insurance, they're providing something like B2B or friendship-based insurance. What does it mean? You can unite together with somebody who you know as customer. For example, I know my employees, I know my friends, I know my relatives. I know about how I know about their behavior, I know about their potential risks. And these platforms provide the opportunity, for example, to pay for the next year $100 or $1,000 in advance. It will be some amount of money together. If something will happen with somebody inside our group, this money can hedge risk versus client. If everything will be okay with everybody, our money will come back to us. We can pay next year together in this group or create new group, and every time these players only charging some small fee to create these groups. Their success not belongs to how much money they will not pay to you when something will happen with you. Because it will always, as I mentioned two chapters before, with traditional banks or traditional insurance players, it is a very big question for employees. You can pay for your customer, or you can pay dividends for your shareholders, because they are paying to you annual bonuses. And customers always losing in this choice. And these platforms, they do not depend from money which will come to you as client when something will go wrong. Oscar Health, it is one of unicorns between these 50. As I mentioned, Insurtech growing so fast and already provided 5 unicorns between 50 total in Fintech. Zenefits, very interesting business model. If you will try to estimate what kind of value this company provides for their clients, you can decide that it is payroll company, how to manage your financial negotiations with your employees. But it is only how to anchor your clients. They are providing this software for companies mostly for free, or for some small money if you need some additions or customization. But they monetize this data after that to provide insurance for your company, for employees of your company, and they monetize this data in Insurtech. And we estimate this company as Insurtech player, not as payroll company. Payroll, it is just how to attract customers. Trough and a company named Slice, they are playing with such kind of customers like Uber and Airbnb. When Uber and Airbnb and other on-demand services came to the market, they immediately created new types of employees. Driver of Uber, he is employee of Uber, or he is independent driver. If he is driving his car for his personal reasons, he have to be insured as driver of Uber, or as person, or I am passenger of this driver. I have to be insured by Uber, or I have to be insured by myself. I have to be insured only during my road, or after that. And Trough and Slice, they are working only with concrete target audience, with on-demand services like Uber, Airbnb, and that. Same with Airbnb. When you are renting your house and something can happen with your house when somebody rented, who can cover your risks? Because you was not in your house, inside your house when it happened. It have to be insured by insurance company, by these guests or somebody else, and for whole time or only during the stay of these customers. This is a very big question. Companies like FitSense, they are gathering data from smartwatches or fitness trackers. They analyze this data and provide cheaper insurance based on big data, how active you are, how often do you go to running, to have fitness license, etc. Several other companies, even they analyze how many smokers around you, and they can increase or decrease payment prices for your insurance depending from this data. Several startups like this one, they are providing like red button for some occasions. You can put inside your contact list everybody which you trust, and when something will happen, you just need to push red button, and immediately all these persons from this contact list will be messaged by this app, and they will try to help you in some situations. For sure, you know about payday loans and online payday loan services. Metromile, it is the same company, but for insurance. If you do not have enough money to pay for car insurance for a year, you can pay per mile. Okay, in terms of price, it will be high price if you will summarize whole payments for a year, but maybe you do not want to drive whole year, or maybe you do not have enough money today to pay in advance for a year in advance. And Metromile and the same companies, they are providing you opportunity to pay only for every mile. It's like micro lending, but I mentioned this company, Slice, Bistroff, they are doing the same services for on-demand industry, very high. Oh, one more example of on-demand industry, WeWork. For sure you know this company, which providing you opportunity to rent your working space in coworkings. Extremely popular app in US, in the UK. If you are a small company, you do not have enough money to rent your own office and you are preferred to using coworking spaces, most of them right now prefer to use WeWork. And also how to sell insurance for these offices, because WeWork do not own these offices, but they attract customers for these office spaces. And when customers will come to this office, they are not final renters. They just use it only for 1 to 3 days or 1 to 3 hours. Who will insure risks for this type of situations? Many companies still belongs to price comparison aggregators, but I think it is successful business model only if some industry started to exist, but after it will be not so useful. They have to migrate to more full-scale ecosystem or bundle of services to provide more value rather than just to price comparison ability. If we will summarize what's happening with Insurtech, what kind of new mindset movements are going with this industry. First of all, it is back to basics with mutual insurance, how to hedge your risk, how to insure your risk, not with millions of other customers of these insurance companies, but how to unite into the groups which people you already know and you trust them, and how to split this risk between somebody who you already know. Second one, as I mentioned, its stream belongs to new economies, like WeWork, like Uber, like Airbnb, providing its new type of risk. When you will go to your current insurance company and will tell that you just launched co-working space in KL and you want to insure your risk with these renters, I hope that they will, I'm sure that they will know what they can do with you, because they do not understand what does it mean on-demand economy. As I mentioned, with such apps which are store data from smart watches, fitness trackers, other, even for example, several apps providing you opportunity to, when you are sitting into your car, you can activate your app and they will analyze how aggressive do you drive your car, and if you are calm driver, safe driver, they will share with this data with your insurance company, and your payment for your car insurance will decrease, extremely decrease. And most of Insurtech players will come not from understanding of insurance risk, but will come from data analysis. Also, historically, whole insurance services very well linked with services which are providing personal financial management solutions. But we will talk about this vertical a little bit further. And with blockchain, how to store data about how clients of hospitals or insurance companies in one trusted and also horizontal based layer, and to share this data between themselves. Cyber insurance. When digital world came to us, we found new type of risk, how to be not hacked, or when you will be hacked, who will cover your risk. And right now it is very big and also political sensitive question. And several startups in Insurtech, they are trying to cover only cyber insurance risks. What about also porn revenge? What about cyberbullying? It is very big problems, especially for young customers across the world. In the UK, they have so many scandals for last year. In the United States, the same situation. Who will insure this type of reputation risks? Who will support you in these cases? Let's talk about it with your current insurance companies. Do they know something about these verticals? Everybody know about car insurance, but what about drone insurance? So many companies started to use drones for their own aims, to create videos, like filmmakers, to deliver some purchases as Amazon are doing right now. Who will cover this risk? If some thefts will hack your drone, who will cover the price of this drone? Or if it will be drone accident, who will pay for this risk? I already mentioned about that so many devices right now started to be connected, not only your smartphone with smartwatches, but also, as I mentioned, some offices prefer to use some indicators about smokers, not only to prohibit smokers inside or near the house, but also how to decrease payments for insurance of their employees. If you do not have smokers, for sure you have to pay less. But how your insurance company will know about it? And this type of services providing opportunity to know about this data. And as I mentioned before, insurance companies also not so successful as banks with how to work via APIs with new players, because insurance, it is always about how to share data between many players. And as I mentioned before, this middleware which will connect different players, not only banks, with telcos, with messengers, but also with insurance companies, how they will be connected. It will immediately decrease your own costs, how to launch your company. As I mentioned, we are covering most of Insurtech players, but 33 of them in details. You can read data about them through our reports or on our site, Fintech Ranking. If you have some questions regarding to Insurtech, please, very welcome. Yep.
The more likely, like the policyholder, are more likely to have a personal touch. But as we can see, all the Insurtech startups in US states, all that, they are more likely is business to consumer, which is means that it will cut out all the job opportunity of the insurance agents, right? So I think in Malaysia now, there are still a lot of insurance agents. So from our research, I think mostly of the insurance company are not likely to be moving forward to Insurtech. So how actually Insurtech will slowly disrupt the insurance industry? This is I was wondering how we going to let the insurance industry in Malaysia to be moving forward to Insurtech. Yes.
Yes, I agree with you that Fintech and Insurtech, many dozens of hundreds of thousands of people or millions across the world will lose their job. But several pluses of this situation. First of all, it's not plus, it is just sense of this question, but from other side. When I met with CEO of one of the biggest bank in Asia, state-owned, we talked about some vertical, and he thought, oh, I want to work with these guys, but after that, after 1 hour of negotiation, he told that, oh, between my 50,000 employees, I will have to fire 8,000 because this tech solution will make their job with zero useful. And he told, I'm 55 years old, only 5 years until my pension. I am state-owned bank. Government will come to me and tell, oh, you just fired 8,000 people across the country, and they right now go into the streets and organize demonstrations against government. You will be fired only 5 years before your pension. And he thought, I understand that you are doing right stuff, but I want to wait my pension before. And after that, we will think about innovations. It is great example how personal wishes of concrete persons are moving against history, against customer satisfaction, against everything, against progress. They think only about the annual bonuses, pension plans, etc., not to be punished by their shareholders. But what about customers? Fintech and Insurtech, it's always about the advocate of customers. They're not advocates of shareholders, C-level guys, the annual bonuses, etc. About pluses of this situation. Think about it, not that several dozen of hundreds of agents will be fired. Think about it, several dozen of hundreds, thousands of people can finally find better job, create to know something more, to create new businesses, or to become, I don't know, specialists in other area. Sometimes people have to move from comfort zone to zone of discomfort to start to think different, to start to choose something new. You cannot stop the progress only because it's not so good to be fired. Today it is bad news for you, but for tomorrow, so many businesses started only because these entrepreneurs were fired by somebody. Even I launched my own career when I was in university. I came to McDonald's to work for them several days. I do not know why, but they declined my proposal. I do not know what I told for them, but I wasn't hired by McDonald's. But today, I was very sad at that moment. But today I'm here. Who knows what's better to you? And the same with these agents. Right now, so great opportunities to agents to become non-financial agents for fintech players. Across Asia, you have to work with agents, but not what, for example, in Philippines, about 7,000 islands. Banks, insurance companies, they are not able to cover whole territory. But agents, independent agents, they can. One of our company, Ayana, they work with these agents and they are selling different type of fintech solutions through their channel. The same with companies like M-Pesa or Big Cash. They are working closely with these independent agents. They can be extremely useful for fintech players, but somebody has to push them to think about it. It will be, for sure, it's not so comfort for them to think about Insurtech solutions and how to fire several thousands of agents, but it will be more discomfort situation for them when they will be bankrupt. Let's think about it in long-term play. Let's check Pinan from China. I do not remember the evaluation, but only the one app which are matching doctors and hospitals across country with patients which are trying to book to make an appointment to go to therapists or other doctors inside these hospitals. Even valuation only of this app from Pinan, 3 billion. It is traditional insurance company which decided to become digital insurer about, I think, 7 years ago. Now it is one of the biggest insurance companies across the world and technically extremely advanced. And they started to think about digital insurance when they saw that Alibaba became more successful than offline retailers. And they came to Alibaba and told, you have some risks with your merchants, with your delivery, with your logistics, etc. We can cover this risk. We do not know nothing about it, but let's try. Right now, whole big e-commerce players hosted on Pinan. They came to retail area too. You have to decide. It's uncomfortable for today, but to become bankrupt in 1-2 years, it's more uncomfortable.
One more question.
Hi there, sir. Actually, I saw in your Insurtech there's a lot of big data analysis going on. Okay, I presumably all this will be used for the premium adjustment and the price adjustment. apart from that, I want to know if registered tech going to comprehend or going to become part of this so-called insurance tech, because when we're doing the so-called premium adjustment, we need to know that whether this person is who he claims to be, whether he is healthy or he's fit or not. Because I see that insurance tech definitely is a big collaboration between big data and the fintech sector. Thank you.
Yeah, there is big synergy between RegTech and Insurtech, and also health tech. We have to talk about health tech when we are talking about Insurtech. 6 billion came to health tech last year. When you are providing some tools to track, for example, your mental health, when you are in depression, does it influence to your health in total? Yes. Can it influence to your insurance price? Yes. Who I care about it between traditional insurance players? Nobody. But several players from health tech, they already started to provide these opportunities. And RegTech, but also so many industries integrated with Insurtech.